Assalamu alaikum wa rahmatullahi wa barakatuh. It's always a treat to be back in Atlanta. My name is Hood Williams, as a regional manager for Amana Mutual Funds. But my area, the region that I cover also includes Atlanta. So every opportunity I have to come back home, it's a special treat for me. So welcome, thank you for the Imam and the administration of Masjid Omar. Thank you for inviting me. Thank you for inviting Amana Mutual Funds. It's really our passion to educate the community about Islamic investing, because this is one of the most important kind of opportunities that we have for financial empowerment, for financial improvement in in our modern day life. Like when you think about the American stock market, it is one of the kind of greatest wealth generating institutions in history. And we want our community to have a part in that. So, now that I introduced myself, I also like to talk about why I'm so passionate about what we do at Amana Mutual Funds. Probably around 5 years ago, one of the aunties in our community reached out to me because she was thinking about her retirement. And so we sat down and we talked about what she had prepared for retirement. So we went through, her Social Security, her savings, so on and so forth. And it kind of turned out that she had about $800 to $1,000 coming from Social Security. And that was her only kind of funds that she had available in retirement. And so the question was why did you not take advantage of a 401k or 403b or other kind of savings plans? And she was like, because I didn't think that they were permissible. And so while we know that Allah subhanahu wa ta'ala is going to take care of his servants, and I know she will be taken care of, that the idea that she's going to be in financial hardship because of her faith is something that really stuck with me. And it's something that said that I want for our community to kind of understand this, understand investing along with Sharia compliance, and understanding the opportunities that they're out there in the market. And so that's one of the reasons that I feel so passionate about the work we do at Amana Mutual Funds. And so this is going to be a pretty brief presentation. We're going to talk about what should you be thinking about at the end of the year as you kind of reflect on this year, on 2021. It's been a very interesting year. What should you be thinking about in terms of finances? So we're going to go down that, and then we're going to have some time for question and answers. I think this is I get the most out of these question and answers. And if there's a question that I don't know the answer for, I definitely will follow up and get back with you. The first thing that we have to start with saying is that all investments, incorporate risk. So you can't invest and not take a risk. And also that past performance is not going to be a guarantee of future performance. So you also can lose capital. So those are disclosures that we have to keep in mind. And so reviewing investments. So when you think about reviewing investments, I think the first thing that you have to say to yourself, are my investments permissible? Are they halal? Are they haram? If you think about it, we have people in the audience. Raise your hand if you would choose to work at Anheuser-Busch. What about Smithfield Pork Processing? Anybody? Nobody wants to raise their hand? So if we're not willing to work at these organizations, why are we allowing our money to work at these organizations? Right? The investments you have are your resources, and they're going out and they're working in organizations that you yourself wouldn't work in. So one of the things to think about when you're thinking about your investments is to look at, are they aligned with my faith? Are they aligned with our belief? One of the things that we do at the Amana Mutual Funds is that we have 3 screenings. So the first one is a Sharia compliance screening, and we'll talk about that later on. The second one is ESG. So is it environmental? Is it sustainable? Does it have good governance? And then additionally, you also have to ask yourself, is this a good company? And so all three screenings are the ones that we look at when we're talking about good investments. But particularly, looking at your portfolio, whether they're halal and haram, and especially when you have choice. One of the things you think about is that when you have more choice, then it's going to be the more opportunity to make your investments permissible. When there's less choice, there's less opportunities. We'll see some accounts where you don't have a choice of what to invest in. They have a target date fund, or they have another fund, or you have to do 50% equities and 50% bonds, and bonds are impermissible. So you want to make sure that when you have accounts that give you choice, and we'll talk about some of those, that you take advantage of some of the Islamic investment opportunities. The second one is asset allocation. When you think about asset allocation, there's different kind of assets that you can invest in. So there's equities, and there's different type of equities. There's large cap, medium cap, small cap, and as well as there's bonds. And since we know bonds are loans that you give to a company or a government, one of the things that is available now are Sukuk Funds, and we have a Sukuk Fund that we'll talk about. A Sukuk is an Islamic certificate that's asset backed. So it functions like a bond. It's almost like a fixed investment. And then you have alternative investments, whether it's cryptocurrency or real estate, so on and so forth. So you want to have your assets diversified through different asset classes. And so what often happens is that you might start off the year with the asset allocation you want. You're young. You have a long time horizon, so you're like 80% equities, 20%, kind of fixed investments. Then over time, maybe your equities kind of, appreciated a lot, and the fixed investments not so much. So then it's good to revisit that asset allocation to make sure that it's in line for your investment objectives. The third one is we're going to talk about qualified accounts to save on taxes. So this is an important, idea when you think about saving and investment, to think about the impact that taxes are going to have. And so we're going to check out some individual retirement accounts, some employer plans, and then we're going to move on to talking about saving for college. Many of us have young children or older children, and education is a very important thing, and the cost is going up. So we definitely need to think about putting resources aside, and not just putting those resources aside, but allowing those resources to grow and to work for us so that we can kind of keep pace with the inflation on higher education. And then we're going to talk about a few different tax efficient donation strategies, and then we'll kind of conclude with a question and answers. So to start with, the traditional IRA. The traditional IRA is really kind of the bedrock kind of retirement vehicle. So you're allowed to put in $6,000. If you're above 50, you can add actually $1,000 additional catch-up contribution. So when you put the money in a traditional IRA, you put it in and you get a deduction on your taxes. Then it grows tax deferred. So you don't pay taxes on why it's growing. And then when it's distributed, then that's when you have to pay taxes on it. So these plans are very simple to administer. If you go to our website, you can open an IRA. It takes between 20 and 30 minutes. And they generally have very few expenses. In addition to this is a self-directed account. So when it's a self-directed, you can choose the options of what you're investing in. This is why it has ample opportunity to make it in line with your values. The second one we like to talk about is an offshoot of the traditional. It's called the Roth IRA. So the Roth IRA has the same contribution limit as the traditional, $6,000 with a $1,000 catch-up. But the money goes in after tax, so there's no tax deduction when you put it in. It grows tax deferred, but when you take it out in retirement, it's tax-free. So this is the advantage of the Roth. It's It's simple to administer, just like the traditional, whether you choose a traditional or a Roth IRA. It's very simple to easy to open. And it's also self-directed, so it's halal. So other thing to keep in mind about the IRAs is there are 5 reasons where you can actually take the money out before 65, before retirement. One is you're 59 and a half, which is retirement. Number 2 is if you become disabled. For disability, you can take money out of your IRA. Number 3 is if you have major medical expenses. If you're facing major medical expenses, you can take it out without penalty. Number 4 is the first-time home buyer. So if you're a first-time home buyer, you can take money out of your IRA to help you purchase that home. And the last one is for education for anyone in your immediate family. So you can use these funds for them to go to college. In addition to traditional IRAs, there's also employer-based plans. If you work for a public company, it's probably called a 401k. If you work for a private company or for the government, it may be a 403B, a 457. So these plans have a couple advantages. One advantage is they usually, your contribution that you're contributing, your company will also match that. So like say if you're putting in 6% of your salary, your company will match 80% of your 60%. So that's a huge benefit. In addition, the company usually pays expenses for these accounts. So they pay expenses for these accounts when you still work for the company. If you actually leave the company, then there will probably be fees that you have to maintain it. One of the things that is possible is that when you transition to another company, you can roll over your 401k or your 403b to an individual retirement account, such as the ones that we offer at Amana. And another positive about the employer plans is it has a higher contribution. For 401ks, you can contribute up to $19,000. And so you have $19,000 that's kind of growing tax deferred. And sometimes, in some cases, companies are offering a Roth 401k. So that's the same as the money being put in after taxes. And when you take it out in retirement, you're able to take it out without paying taxes on it. So moving on to the educational savings accounts. But before I touch on our educational savings accounts, I want to mention another account that's popular for college education savings. It's called a 529 plan. The 529 plans are state-sponsored plans. So Georgia has a different program than South Carolina has a different program than Florida. And the 529 plans come in different flavors. Some states have a prepaid plan. Other states have like an investment plan. So you're able to invest your dollars. You know, one of the tricky parts about 529s is that it's usually very kind of fixed, investment options. So usually the investment options are fixed and they might include bonds in their portfolio as well as equity. So that is kind of comes into issue in terms of being halal. And so to talk about the educational savings account, the educational savings account can be used for higher education or primary education. So you can use it for Islamic school for your children, or you can save it and use it for them to go to higher education. There is a contribution limit. So you can contribute $2,000 per child per year. So that's the contribution for a educational savings account. And it must be distributed by the time the child reaches the age of 30, but also it could be transferred to another one of your children. There is an income limit. So if you make between 190 or 220 filing jointly, then it kind of phases out how much you can contribute to an educational savings account. But just to touch back to see the difference, with the 529 plan, there's no kind of salary limitation. So it's, regardless of your salary, you can contribute. And the contribution, you can contribute up to $15,000. Above that, you'll get into kind of gift tax implications. And so now we're going to talk about some, investment options. So one of the investment options when you think about, like say if you know that you invest if you know you're going to give $5,000 to the masjid every year, and sometimes you give it towards the end of the year, it's coming right off for taxes. When you think about your investment portfolio, if you have a portfolio where you have gains, you bought let's say Tesla, you bought $1,000 worth of Tesla, now it's worth 5,000. So so you're able to donate that Tesla stock to the masjid if you hold it for more than a year, and you get the full fair market value of whatever that Tesla stock appreciated. So as opposed to selling these shares, paying long-term capital gains tax, and then donating the cash, by donating the stock, you're able to save on taxes for yourself, and then when the masjid receives the stock, they can sell it and they won't have to pay any capital gains because it's a 501c3. So that's one of the options. The second option is that when you have a traditional IRA plan, a year from you turn 70 and a half, there's a requirement minimum distribution. So like as we talked about before with the traditional, that it was it was put in before taxes, it grows tax-free, and so it's only taxed when it's taken out. And so one of the rules for it is that you're going to be forced to take distributions out, when you're above 70 and a half. And so these required minimum distributions, if you are able to also donate your RMD to an organization like Masjid Omar as a 501c3 and get the full tax write-off of that rather than receiving it yourself. The last one I want to talk about is a very kind of unique opportunity. It's called a donor advised fund. So a donor advised fund, if you're working with your CPA or your tax consultant and say, hey, Mr. Williams, you're going to have, a lot of taxes. One option is to increase your charitable giving, say to the tune of $10,000. And so if you're saying, hey, I'm not sure where I would like to donate $10,000 right now. And so you can donate to a donor advised fund. We work with an organization, with a Muslim organization that creates donor advised funds. So you donate that $10,000 to this organization and you get the full write-off that year. But that organization is also going to create an account for you. And this account, they're going to invest your $10,000 in a halal way that's going to earn return, that's going to allow you to continue to find ways to give that money, to be very philanthropic. And then so you can say, okay, I want to give $1,000 a year to Masjid Omar. I want to give $1,000 a year to the Islamic school, to Falah Academy, so on and so forth. And so you're almost creating a kind of mini endowment for you and your family. And so even after you pass away, your children or your beneficiaries can decide where that money is going to go to. So it's a very kind of opportune investment strategy. And it's also growing at the same time. So one of the things we want to talk about is the amount of funds and Saturna capital. The first one is just in terms of when we talk about Islamic investing, what does this really mean? And so Islamic investing, we had the first screening that I want to talk about is a business screening. We talk about what is the primary business of this organization. Are they into exploitative media? Are they a pork processor? Are they an alcoholic company? For those companies who their primary line of business is something that's not permissible in our faith, this is something we don't invest in at all. It's pretty kind of clear. Number two, we have financial screenings. We have financial screenings to look at the companies to say, are they a company that has a heavy amount of debt? So that means they're paying a lot of interest. Or are they a company that has a lot of accounts receivables on the books, meaning they're receiving a lot of interest income? And so we have ratios of debt to trailing market cap has to be below 33%. The accounts receivable to total assets have to be lower than 45%. And these financial metrics are kind of consistent throughout the market with small differences. Like for example, when we look at debt, we're looking at debt to the total company value. So while we look at market cap, there could be another Sharia compliant investment firm that's going to look at debt to total assets or debt to equity, so on and so forth. But there's always like the same kind of calculations. The third one is that we say, many of these businesses might have some impermissible revenue. These companies are diverse. They might receive interest income. You know, the example I like to give is Southwest. So Southwest is not a company that we invest in, but Southwest is a company that takes people from point A to point B. It's a transportation company. Nothing wrong within that. But they also sell alcohol on their flights, which is something that's impermissible. And so we will do our due diligence to kind of understand, it says, what percentage of their revenue comes from these alcohol sales on the flights. And so that percentage of their revenue has to be lower than 5%. So in the case of Southwest, it's much lower than 5%. In the case of throughout our portfolio, it's around 1 or 2%. Because we're not trying to get really close to the rules. We're just, we just have them as a guideline. And then we also have a purification indicator on our accounts. If you put in the number of funds you have, it will say this is how much money you need to even purify that 1 to 2% of it. But so that's our Sharia screening and our kind of guidelines. Number two, we have four funds, with each fund having a different objective, like I said, and they kind of give you different exposure to different assets. So our oldest fund is called the Amana Income Fund. This income fund is invested in large cap companies. So these are like the largest companies in the US who pay a dividend because they're giving money back to their shareholders. So this is our oldest fund. It started in 1986, so it has over 30 years of history. Our second fund is called the Amana Growth Fund. So this fund was started in 1994. This is our largest fund, and it focuses on large cap companies, US companies, that are growth oriented. So instead of paying a dividend, they're going to invest back in their company for future growth. So you will have capital appreciation. So when you think about the companies in these sectors, like think about technology companies, think about healthcare companies. Our third fund is called the Amana Developing World. So similar to the growth, it's looking for capital appreciation, but in the developing world. So oftentimes, if the American economy is sluggish, you can see a lot of movement in the developing world. So when I say developing world, it's companies like Malaysia, companies in Malaysia and Indonesia and India, South Korea, so on and so forth. And our fourth fund is the one that I'm particularly, I'm really kind of grateful that we have this. It's the Amana Participation Fund. And I said we're going to get back to Sukuks a little later. So the Amana Participation Fund is not an equity fund. So it's not invested in a market. It's a Sukuk fund, which is a bond-like instrument or a fixed investment. But the goal of this fund is capital preservation. So when you think about people who have a goal, who have a short time horizon, if a masjid was, about to start construction on their new masalla, they don't want the risk that comes from being in the equities. The equity market might go up, it might go down. It can be very volatile from time to time. And so if you're about to start a building project, you wouldn't want your funds to lose 10%, in a week or in a month. Like that would really cause some stress. And so the participation fund is all about capital preservation and also income. So it gives you monthly income or monthly distributions of income. So this is, and the target return is around 2 to 3%. So when we look at that, that's what we're comparing it to. And so prior to, companies offering these sukuks, Muslims who were, closer to retirement, didn't really have a lot of options to keep their capital safe, but also invest in the future so that your money is still growing. And so that's why I think the Amana Participation Fund is an awesome opportunity. It's not for everyone. If you're 25 and you have your first job, it's likely that you want to take on more risk for the higher likelihood of greater returns. And so when you think of those four funds, so those are the four funds, and then you have the different accounts like we talked about. So we talked about educational savings account. We talked about an IRA account, traditional and a Roth. There's a UTMA or uniform transfer to minors account. Say if you want to open an account for your son or your daughter, but it's not just for college, it may be for their wedding, it may be to save for for a trip or for them buying their first house. The uniform transfer to minors account is an account where you're the custodian, but it's their money. And you can open that account. There's just a plain investment account where you can just go and open an investment account. And in none of these accounts does it cost you to buy in. There's no like sales load charge, and there's no fee when you sell. So our fee is calculated on how much money we manage, and it's different for each fund. But some of the other services that we offer at Amana is brokerage. So one of the things we talk to masjids about is like when I said those stock donations going to the masjid has to have a brokerage account. They have to have a brokerage account so they can receive those donations. So I work with masjids to set up a brokerage account, and then you can kind of advertise when you go to your high net worth donors, say we also have the ability to accept stock donations. Because when you find charitable individuals who want to donate stock, you don't want to tell them, hey, wait right here. We're going to go set up this account and we're going to take it. They'll probably just go on to the next organization that they care about to donate it. So we want our Islamic organizations to be ready. It's really minimal to set up a brokerage account. Then you can set up an investment account as well, so that when you receive a stock, like say you receive Tesla, you don't want to watch Tesla. There's usually most Islamic organizations don't have an investment committee that can make those decisions. So you can sell that stock, and if you still want to invest, you can buy Amana mutual funds. We do financial planning. If you have assets, if you have investable assets over $100,000, you qualify for a free financial plan. And so this financial plan is where it's goal-based, and it runs many simulations to say, if the market goes up this amount, how would you fare? If the market goes down, how would you fare? So it kind of goes through all these simulations to kind of give you your best kind of path forward for your retirement goals, for your financial goals. So that's financial planning. We have investment advisory services where for individuals who have $1 million in assets, we can create a customized portfolio for you. And so say if you want to be very aggressive, or if you want to be very conservative or somewhere in between, we can create a custom portfolio for those customers, for those shareholders. And the last thing is trust. We have a trust company. So, we know how important a will is in our faith. And one of the things that the trust company is, when you appoint Saturna Trust as your trustee, it's a corporate trustee, so it'll take your directives and it'll go and act out and kind of carry on your directives. So you won't have to leave that to family members who are also trying to processing loss and grieving. So that was the last slide. So we definitely have time for questions and answers. I think also online. Are you looking for questions online, Imam?
I'm looking. I don't have any.
Okay, inshallah. So
anyone up here, they have questions, inshallah, they can ask. Any brothers?
There you go.
The fourth point you spoke about, the performance one of them.
Participation? Yeah.
You say guaranteed return of 2 to 3% a year?
So I said our target, like where we would like to be. It might be 1, it might be 5, but our target is usually 2 to 3%.
So every time somebody asks the question, if you can repeat the question.
Okay, yeah, definitely. So he asked about the participation fund and whether or not it was a guarantee of 2 to 3%. So it's not a guarantee, it's a target. Wa alaikum salam.
What about the children who are going to college and working some part-time job, and they are also receiving scholarship? Some of them on need basis, some of them because of the good education grades. How they can invest?
Oh, that's a very good question. So the question was, what about students who are in college? How can they invest?
Right, and they are doing some part-time job also. They want to invest on that, or parents can invest for them
Mm-hmm.
in that case. So will it impact their educational fund which they receive from the state or government?
That's a very good question. So that's so it says for students who are in college and also working, if they save and they invest, how can they save and invest, and will that affect their financial aid? So there's a couple of answers. So first one is that anybody who has earned income can invest in a Roth IRA. So if you have earned income, right, you know, even if it's $1,000, $2,000 for the year, you can invest in a Roth IRA. Additionally, you know, when I talked about the UGMA or the UTMA, Universal Transfer Minors Account, these accounts, even though the person who opens it is the custodial of the account, that this counts as the student's money. And so when you're filling out your FAFSA, your federal financial aid application, it calculates the student's money different than parents' money. So if parents have $5,000, there's some kind of calculation for it. But if a student has $5,000 in an investment account, there is some kind of calculation for it that makes that more worthwhile. And so the hope is that when people are investing, the kind of proceeds that you're getting from investing are more than any offsets you lose from, you know, being impacted by less financial aid. Does that answer the question? Okay. What part?
Let me think about maybe we can individually.
Okay, yeah, definitely. I'll be around after.
Thank you.
There was another question over here.
Does the amount of fund do any like short term, like is everything long term, or like for example you have like money open back when you trade so that
Yeah, so the basic question was, does Amana do any short selling? Yeah, good question. So we are a actively managed fund, but we're not really what's called a trading fund. So we're not doing a lot of trading. We're not doing a lot of buying and selling in this year. We don't do short selling. But one of the things is we do is we look at an industry, that we think has, you know, future potential. And then we look at what are the companies in those industries. And then we take the companies through, you know, our kind of filter Sharia screening and say, now which one of these companies are best value to invest in? So in each of our funds, we probably do a lot of research, but we probably make one trade a year, just in terms of something that we really feel secure about. Because this is not our money, this is our shareholders' money. So we want to be very careful. One of the things that our founder says is that the best way to make money for our shareholders is to, number one, not lose money. And so considerably, a lot of our holdings, we've held them for a long time. So we will buy a company and we're kind of like, we keep that company for a considerable amount of time. So that's a great question. You got a follow-up? Okay. Anything online?
Not yet. I'm watching it. So, I mean, I think people are confused about when you say Amana funds and you type it, so they see Saturn. They don't see Amana. And then, like, am I typing right? Amana with H or something? And then some of the people, they just drop the idea.
Yeah.
Like, why is that? When you type Amana funds, like if Amana website should have come up, and then you tell from that website, hey, our brokerage company is the Saturn Capital.
Definitely. That's a good question. So the question was that a lot of people are often confused because they'll type in Amana funds and it'll take you to a Saturna website. And so what is the difference between, or what's the relationship between Amana Mutual Funds and Saturna Capital? So Amana Mutual Funds was a trust that started as a trustee. It was started in 1984 by some Muslim brothers who wanted the Muslim community to have different investment options. So it's a trust. It has no employees. So it hires a company to manage their investments, to advertise the Amana Mutual Funds, to do the portfolio management of the Amana Mutual Funds. And so the company that it hires is Saturna Capital. And so Saturna Capital is an investment management company. It manages the Amana Mutual Funds according to the criteria from the Amana Mutual Fund Trust, which includes Sharia screening, ESG, and it also manages other funds that are not Sharia compliant. And so usually when we're talking in the community, we use like Amana mutual fund, because this is the one that we're coming to talk about, the Sharia compliant mutual funds. That is around almost $6 billion of assets under management right now across the 4 different funds.
What is the difference between 529 and ESA?
Also a great question. What's the difference between 529 and ESA? I just want to bring it back up. So the difference between 529 and ESA, the 529, you can put in more money. And so instead of a ESA, $2,000, a 529 for all practical purposes, $15,000. And that's $15,000 per person for the 529. So I could put in $15,000. My wife can put in $15,000 for my son. The imam can put in $15,000 for my son in the 529. The ESA is $2,000 per child. So if I put in $1,000, imam only can put in $1,000 for my son. So that's a big difference. Number two, the second difference is for the ESA, there's a salary limitation. So if you make above 220, 190 to 220, it kind of phases out how much you can contribute. For 529, there's no such thing in terms of salary. The third one is that for the 529, it's usually very limited options. So there might be a target date fund that says your child is 10, they have 9 years to college, and so we're going to alter the amount of equities and bonds as they get closer to using that money in college. And so it's, the options of having halal options in a 529 is very limited. The ESA is completely free. You can invest in pretty much anything you want. So you have the options of having, Sharia compliant Islamic investing options in that. So those are like the 3 kind of main difference between the ESA and a 529.
So you have several funds basically. You said growth, development fund, participation, I think, and some other things.
Income.
In income. What is the best performing fund so far Amana has?
You see, that's a very good question. He said, what's the best performing fund? And, and I'm going to tell you that I'm going to answer the question, but you also have to consider your investment objectives, right? Because every fund is not for everyone. So our growth fund has the highest return. Their return year to date for 2021 was 29%. And so that's a considerable return. But the growth fund also has, a high amount of risk. So it could be volatile. So it's 29% return. The last year return was very high. So the likelihood of a third year where you have an outsized return is probably not likely. I don't know the market, right? But it's probably not likely. But for people who are more conservative, who would get nervous for, if you get a 30% return and then the next year it's down 15%, then the next year it's up 5, and the next year is down 10. One of the things to keep in mind is when you look at the 10-year average return, like the 1-year average over the last 10 years, for the growth fund is 17%. And so when you look at that, that's a pretty good number, but you can't look at that number by yourself. You have to look at it compared to a benchmark, because all investments have other options. So the S&P 500 total return, which is basically represents the largest companies in the US, and their total return over those 10 years, that yearly average was 16%. So the growth fund outperformed that. The income fund was 12%, which is a pretty solid return on 12%. So the income fund was 12%. The developing world fund has been kind of, the last 10 years haven't been great. And so, I think our return in Amana Developing World Fund is around 3% over the last 10 years, the yearly average. But the MSCI index that we benchmark it to, it was like 5%. So it's still within that range. And then participation fund is not 10 years old, so we don't have a 10-year return. But the target is right around 2 to 3%. But for the participation fund, the idea is that your capital will be preserved. And so when you look at which fund, you have to know your tolerance for risk. You have to know your time horizon. And so you have to keep those things in mind. But the Amana Growth Fund is one of the funds that's been doing very well recently.
That participation fund, where is the money invested? Because it's not in the market. That, you know.
Yeah, definitely. So the question was, what is the money invested in the participation fund? So the participation funds invest in dollar-denominated sukuks. So sukuks are, these Islamic certificates. The Muslim world has been, pushing the sukuk market, but we only focus on dollar-denominated. So instead of Malaysia ringgit, but we look, and most of these come from the Gulf. So UAE, Saudi, so on and so forth. So they're, Gulf produce, dollar-denominated sukuks. But just to give you an idea of a sukuk, sukuk is, instead of loaning a company money, like say Qatar Airways wants to get a new fleet, and so they put out a bond to raise $10 billion, and they're going to pay, a 4% interest rate. So instead of doing that, which is not permissible, that Qatar Airways would, create a special purpose vehicle that would buy the planes and to sell these Islamic certificates based off them leasing those planes to Qatar Airways. And so the arrangement is backed by an asset of the planes. If something happens to Qatar Airways, the SPV can take the planes back and sell them to give the capital back to those investors. So that's how you get the kind of same fixed investment without the kind of riba kind of structured transaction or interest structured transaction.
Can you give an example? For example, if you put initial $1,000 in growth amount and every month you put $100. So after 10 years, how much is going to be based on the 10-year return?
Say that one more time.
So I said, give an example that, for example, you put initial amount $1,000 and then every month you put in on auto pay for $100 and you are doing it for 10 years. Mm-hmm. So how much approximately will it be?
Yeah, I would need Excel for that. So the question was, if you put in $1,000 and you invest $100 a month for 10 years, how much would it go? So first of all, we don't know about future results, right? So it's kind of hard to speak. But I'll share a couple of things with you. One is, we have this slide, it's on our website. It's, if you invested $10,000 in the Amana Growth Fund in September 2011, and you invested $10,000, okay? Were you with me?
Yeah.
And it's on our website, so anybody can go. If in September 2021, and if you reinvest all capital distributions, you reinvest all dividends, in September 2021, it'll be worth $50,000.
How much?
50.
50,000. 10,000. So in 10 years, 10,000 will become 50,000.
That's what it did in the past. We can't predict the future, but that's what it did in the past, right? And so the income fund, like that same chart, and I don't know the exact number, it's almost like $34,000 for the income fund. And so if you go to Amana Mutual Funds, you click on Growth Fund, you click on Income Fund, you scroll down, you'll see this chart. It says September 2011, September 2021. And so that gives you a sense for, that's not adding, so what Imam said about investing $100 a month, that's called dollar cost averaging. So that is a very good strategy to kind of build wealth. So that if the price of the mutual fund or the price is appreciating, you're going to buy less, but you're still investing. If the price is going down, you actually are buying more shares as it goes down. You're buying less shares as it goes up, but you're getting a good price, as you go for whatever direction of the market. So it's a strategy that, many financial planners kind of encourage, like dollar cost averaging, like every month, investing. And that's something that happens naturally in your 401k. When you invest in your 401k, there's an asset or there's a security that you're buying every time they put the money in they take the money out of your paycheck and putting in your 401k. So that gives you an example for if you invest $10,000, how will it grow? And so, our average over the last 10 years for the growth fund was 17%. So that's considerable. That's not, and this year it was 29. It was 29% year to date for that. So if you invested $1,000 in January 1, it'll be worth $12,900 today. So that gives you a sense that, the market has been doing pretty well. And so when you think about the market is doing pretty well, a lot of people might not want to go in right now because they're like, oh, we want to wait till there's a correction. The reality is that the market is going to do what it does. Like when you see that chart, you'll see it going up, but sometimes it goes down, sometimes it goes up. And, if you can predict the ups and downs, then you probably are in the wrong business, right? And so when you're getting in by dollar cost averaging and you are reinvesting your dividends and you're reinvesting your distribution, you're doing something that's called compounding. We have a slide here, and usually it's called compounding interest, but that's because they're like doing loans, but it's called compounding investment. And so compounding is that when your money works for you and it gets more money, and that money is actually creating money that works for you. And then that money is creating money that works for you. So for example, if you invest $1,000 and there's a dividend, instead of receiving that check yourself, it can go back to buy you more shares. And there's a capital distribution. Rather than receiving it, it goes back to buy you more shares then so over time, it's a process that can, like Albert Einstein, we all know he created the atomic bomb. He said that compounding is the most powerful force in the universe. And this is Albert Einstein. So getting in dollar cost averaging, understanding your objectives, because your objective might not be retirement. We have a lot of, Hajj, the price of Hajj is going up every year, right? Hajj is not getting cheaper. So it might not be something that you can just say, hey, I'm going to Hajj this year, I have the money, here's the money, here's a check. It might be something you have to save up for. So that's not long term. So, if the market, the growth fund has a correction, it might say, well, honey, we got to go next year. So you might want to do something that's more stable like the Amana income fund. And so we have accounts where people are saving for that Hajj because it's something that the reality is now that people have to save for. But, getting in the market, understanding your objectives, understanding volatility and risk, understanding tax implication and fees, and then, having that patience to kind of see it through, has really worked for people who are investing.
We still have time.
Why exam?
I may have missed the part. Is there any age limit for investing in the retirement funds?
There is, while you have earned income, you can invest in a Roth account. But any of our accounts, besides the ESA, if you have earned income, you can invest in a Roth. I think there might be, because there's requirements, minimum distributions at 70.5, then, there might be a rule of not investing in a traditional IRA. So some of the question was, is there an age limitation in investing in some of the accounts? So some of the accounts, because they're like the retirement accounts, they say age limit. So some of the accounts, because they're retirement deferred, it might not make as much sense. The benefit of it might not be. But if you have earned income, the Roth account, you still can invest in a Roth account. And then in the Roth IRA, there's no required minimum distribution. So you don't have to take that money out. You can leave it in, you can grow. And even when you pass it on to your children, they won't have to pay taxes on any distribution from the Roth.
Do you also invest in crypto?
Very good. The crypto question always comes. So I was like waiting. I was like, when is the crypto question going to come? So that's a good question. One of the things, I've been doing presentations with one of our executive vice president. He's the portfolio manager of 3 of our 4 funds. And what he often says about crypto is similar to crypto right now with the different kind of coins that are coming out. It's similar to like the internet in the early 2000s and the 90s, where no one was really sure how you were going to make money. There was a lot of different business ventures or ideas of how to make money, and they weren't really set. They were growing, so they had great valuations, but they weren't really kind of set businesses. And people didn't understand them, but they just knew it was tremendous growth. And so you had a lot of winners and you had a lot of losers. And so at Amana Mutual Funds, this is our shareholders' money. And so we want to be good fiduciaries. So we are cautious. And so, you know, down the road, when the crypto kind of market becomes more stable, when there's even more regulation, like right now, it's a market that's not heavily regulated, and usually that changes over time when, you know, people get hurt, and then, you know, politicians want to make rules to kind of regulate to kind of help the average investor. So right now, it's not something that we are looking at. Even many of the cryptocurrencies or the coins are looked at as commodities versus securities. So right now we're investing in equity securities and sukuks, but crypto is like kind of, you know, outside the scope for right now. No problem.
Amana Mutual Funds, does it maintain CRT fund, CRT, charitable revocable trust?
Charitable revocable trust.
Yeah.
Oh.
Opening account, just.
Yeah. I'll have to get back onto you that, because I think charitable revocable trust, we do some work with charitable revocable trust, but now we're doing more of the donor advised funds. I think they operate similar. So we're doing more with donor advised funds, but if we talk after, I can kind of get information exactly on charitable revocable trust.
Regarding 401k, I saw you on the slide, self-directed, and also 100% halal. Can you please explain me?
Oh yeah, that's a great question. I'm glad I didn't leave here without talking about self-directed. So the rule is when you have more options, you can make it permissible. And so a self-directed fund, where is your company is saying, Mr. Bilal, Mr. Muslim, Mr. Muhammad, you can take a certain percentage of your 401k and invest it however you want it. So it might be 50%, it might be 80%. And so it puts in a separate brokerage account where you can buy individual stocks. You can go all in on Tesla, or you can buy Sharia compliant mutual funds, such as Armani mutual funds. And so if it's not something your corporation offers, if you reach out to us, we can help you and kind of guide you in the process of talking to your HR department, talking to your company about also adding this opportunity. One of the things that companies want, it's a employee market, right? And so they want to keep and retain employees. And so they might be willing to do those things that are in the best interest of employees. And other things is that they want you to invest. They want you to invest in their future. They're not offering pensions anymore, but they still want the people who spend their time, who work hard for their company, to be okay when they choose no longer to work for the company. And so if you're not investing because you don't have options that sit right with your heart, that allow you to sleep at night, that's something that you can talk to them about and say, hey, I want to invest, I want to save for my retirement, but I don't want to invest in bonds because it's something that I'm not going to be comfortable with. Can we do a self-directed brokerage option? And so it's on a company by company basis. There are a few companies that we know. AT&T, for example, AT&T allows you to do 50% of your 401k into a self-directed brokerage option. So that's a very good question. I'm glad you asked.
Give us a couple of points. Why should we choose Amana mutual funds?
Yeah, I already said 29% year to date. Year to date. No, seriously, so returns are important, right? And, the first one is that when we think about us as Muslims, we want to do things that are aligned with our faith. That's where we work. That's why, you know, from going to the bathroom to eating up, when we wake up, when we go to sleep, why is our money any different, right? Why are we being super Muslim with everything else, but our money we're doing whatever? So finding a company that invests according to your guidelines. Like, you know, if you're a vegan and you're a part of PETA, do you really want to kind of invest with Smithfield Farms? No, you wouldn't. So the first one is values. The second one is, you know, look at the companies. Like, you know, you can see the return on our website for all of our different funds. Compare them. There's, you know, alhamdulillah, there's other options out here for the Muslim community. Before a while, you know, there was 2 options. Now it's 3rd, now it's 4th. Now, you know, almost every 6 months there's a new option here. And alhamdulillah, is, you know, competition is good for the market. But look at the returns, track them. And the third one is just customer service. It's like, you can have the best restaurant in the world, but if it's crummy customer service, then, you know, you might not want to go there, or you might not want to go back. And I think one of the customer service kind of opportunities for us is that we have people in the community. And so, you know, I'm in Texas now, but I've been in Georgia probably 3 or 4 times over the last 2 months, right? And we also sponsor events in Georgia. So for Masjid Omar, Masjid Al-Farouk, if there's a fundraising dinner, if there's a e-picnic, this is something that we want to do because we want to get the word out about Amana mutual funds. And also, when you call me, you have my phone number, my card. You could call me if you have questions. If there's another opportunity to educate the community, you know, even if we're talking to PTAs of Islamic schools about 529 and ESAs, you know, this is my responsibility. And the last one is, even when you call our 1-800 number, you just get great customer service. You know, I've been working for Amana since June, but I've been investing with them for 30 years. And, you know, I have several children, so I have several ESAs, I have my retirement, I have a Roth. And so, you know, I'll have like 12 pieces of paperwork and I'll call them and they will walk me through everything I needed. Rolling over your IRA from your old company to us, transferring, answering questions. You know, it's just it gives you a great customer service. And I think that's another thing that has us standing above other companies in the industry as well. You know, but, you know, I definitely appreciate coming and having an opportunity to educate the community. And one of the things I want to kind of encourage our community is that we have to find a way to get our sisters this information as well. So please take this information back, take it back to your mothers, your daughters, your wife, because, you know, one of the traditions in our faith is that women building wealth. And so El Qarim University in Morocco, it was endowed by a sister. And her sister endowed another university in Morocco with a waqf. So it's still running off of what these very philanthropic sisters did. So we need, you know, usually our presentations are after the prayer, so we get a good crowd from the brothers, but we need our sisters to have this information just as much as our brothers, because, you know, they have money too. We want their money to work for them just like our money works for us. And so when, you know, our community does better, you know, when you think about the people who are choosing Islamic investing, these are people who have a certain amount of care about their faith. And it also comes with that is zakat. You can't talk about Islamic investing and not zakat. You know, one of the things that we also do at Amana Mutual Funds, if you call us in, we will actually calculate your zakat for you and send you a zakat statement every year. And the zakat on an investment is different than zakat on regular wealth that's kind of sitting in the bank, because this is actually invested and it's actually working. Instead of 2.5%, what the scholars have said is 10% of your gains. So if you invested $100,000 and then at the end of the year it's $150,000, that $50,000 gain is 10% of that versus just 2.5% of the whole total. And so we'll send you a zakat statement every year that will go out per account. And so that's just another thing that we do for our Muslim shareholders. So, for those things, I just really think, of course I work for them, but I really think it's just a great opportunity. Give me a call, let me know. I'd love to, have a conversation with you or you and your family to talk about how you can invest and kind of prepare for the future. Inshallah.
Based on your experience, is it like worth to invest in long-term stocks or mutual funds?
That's very good. You say, is it worth to invest in stocks or mutual funds? It just depends. Everyone's different. I think one of the things to keep in mind is, at Amana, we have seasoned professionals who are looking after your money and kind of investing in it. And aside for the long term, managed or just individual stocks, I wanted to grow because I'm going to need it in retirement or in the future. And then you can have your bucket where it's like, hey, these are things that I think have a lot of opportunity. So I'm going to take some money and to kind of see if these things pan out. So I think that's something for people who are willing to do the research, who are willing to do the look. If you're a person that just wakes up and like, oh, Walmart, it may or not be beneficial, but if it's something that you're interested in, because I think equities investing is something that gets people's interest. And so there's definitely room for that, but there's also room to make sure that you're building something for the future. So, I think a little bit of both will probably be good. You got a question? Okay.
So, since you are a financial company, Saturn mutual fund, do you guys have any type of system to give donations to masajid and Islamic organizations?
Yeah, so like I said, we can't give a donation to the masjid, but we do sponsorships of events. So that's how we're kind of community oriented. So if it's Masjid Omar's Eid picnic, Eid bazaar, give me a call. If it's a fundraising dinner, we just sponsored a fundraising dinner, and we try to be, we don't do like huge sponsorships because we try to do a lot at a lot of different masajids and Islamic schools. And so one of the benefits of having these regional managers embedded in the community, they know about the community events, they know about what's happening. I would love to get on Masjid Omar's WhatsApp group to see when there's an event coming up and saying, hey, can we sponsor that? How can we come out and say a few words? So, like ISB has a fundraising dinner, so we talk to them about sponsoring that. So anything out in the community we want to sponsor, but usually we, giving just a regular donation kind of doesn't work for our business. Yeah, y'all got some tough questions. Alhamdulillah. Alhamdulillah. But, even after today, if there's another questions, if you want to take this information, please take this information to somebody in your family, to a friend, to somebody who's probably moving from one job to another, saying, hey, what are you going to do with your 401k? You can roll it over to Amana. Somebody who's just starting working, and when you just starting working, if you get used to saving, to dollar cost averaging, is not going to be as a big hurdle, getting used to these good kind of saving and investing habits. Definitely share on my business card. Share on the website. If you call a 1-800 number, if you go on our website and you send them an email and you say you're in Georgia, they're going to send that to me. And I'll definitely make sure to give you a call to kind of set up a time where we can talk, through Zoom or on the phone or one-on-one, just about your options. There's no pressure. It's just your options. It's education. And then you can decide the best kind of strategy for you and your family. So definitely spread the word, and especially to our sisters. We have to make sure that you don't want your money growing at 27% and your wife growing at 1%. We want them both to grow. So inshallah.